Missiles rained down on Doha. Israel's strike didn't just kill Hamas leaders, it struck the heart of America's presence in the Gulf. Donald Trump admitted he wasn't warned until the missiles were already airborne. For 20 minutes, Washington was silent, while the Arab world watched. Qatar, home to the largest United States military base in the region and the world's top LNG supplier, realized it could be hit without protection. Oil futures jumped 4%, gold broke records, and Arab leaders began asking, if America won't defend Qatar, who will? Donald Trump's immediate problem was credibility. He claimed he had not been informed by Israeli Prime Minister Benjamin Netanyahu before the strike. The White House repeated that line, insisting the United States only learned of the attack once missiles were already in the air. Yet the timing raised suspicions in Arab capitals. If Washington was caught unaware, how could it guarantee protection for allies? If it knew and failed to act, what did that say about loyalty? Both possibilities undermine decades of trust built on security commitments. Qatar is not peripheral to America's posture in the region. The Al Udeid Air Base outside Doha houses more than 10,000 United States military personnel and serves as the nerve center for operations across Iraq, Syria, and Afghanistan. For years, officials described it as indispensable. That is why the silence that followed the Israeli strike reverberated so loudly. According to Reuters on September 15th, President Trump posted on Truth Social that he had only been notified by the United States military, not Israel, shortly before the attack began. By the time he attempted to reach Doha, 20 minutes had already passed. In the Gulf, timing signals intent, and hesitation reads as betrayal. The Arab League convened an emergency session in Doha. Their statement condemned the attack as a violation of sovereignty, demanding accountability not only from Israel but also from any partners who enabled the strike. The language was sharper than usual, reflecting a new level of distrust. Leaders asked a simple question. If Qatar, with its U.S. base and financial clout, could be hit without protection, who among them was truly safe? Qatar's importance extends far beyond military strategy. With around 13% of proven global natural gas reserves, the country is the world's top exporter of liquefied natural gas, shipping more than 80 million tons annually. Its supplies are critical to Europe, which has been struggling to replace Russian pipeline gas, and to Asia, where Japan, South Korea, China, and India rely on long-term contracts. When Qatar is destabilized, prices spike and energy security in both hemispheres is shaken. The country's sovereign wealth fund, with assets estimated at nearly $500 billion, holds major stakes in European banks, automakers, and prime real estate from London to New York. That web of investments means instability in Doha ripples instantly into global markets. The shock of the September strike sent Gulf stock indices into decline. Dubai's benchmark fell more than 1.5%, and Riyadh's index lost over 1% within a single trading session. Washington moved quickly into damage control. On September 16th, U.S. Senator Marco Rubio announced that the United States and Qatar were close to finalizing a new enhanced defense cooperation agreement. Qatari officials confirmed that talks had accelerated because of the strike. But the question remained whether paper agreements could compensate for the perception that when missiles fell, America hesitated. At the same time, Russia seized the moment. Moscow condemned the strike with unambiguous language, really setting itself apart from Washington's muted response. Russian diplomats offered new security guarantees, intelligence cooperation, and pledges of non-interference. Egypt and the United Arab Emirates have already expanded arms purchases from Russia. Saudi Arabia continues to coordinate oil policy with Moscow through OPEC+, linking energy strategy directly to Russian interests. China also moved to strengthen its role. Beijing has been the largest buyer of Gulf oil for years, and now it's locking in contracts denominated in yuan. In 2023, Qatar agreed to supply liquefied natural gas to China for 27 years in a deal valued at tens of billions of dollars, settled in yuan rather than dollars. That shift signaled a willingness to test alternatives to U.S. financial dominance. According to IMF data released in July 2025, the dollar's share of global foreign exchange reserves slipped to 57.74% in the first quarter, while the euro rose above 20%. The yuan's share, though still small, has been climbing steadily. Let's pause here because this was not supposed to happen. Not this soon. For decades, the Gulf's energy trade was virtually synonymous with the dollar. Every OPEC deal, every pipeline contract, every tanker shipment was priced in U.S. currency. Now, with Arab economies exploring yuan settlements, ruble trades, and even regional payment systems tied to BRICS, the financial order Washington built looks less certain. The question emerging in Riyadh, Abu Dhabi, and Doha is no longer whether to diversify, but how fast to do it. Trump's predicament deepens when considering the arms trade. In May 2025, the U.S. agreed to a $142 billion package for Saudi Arabia, including air defense systems, aircraft, and maritime security assets. Such deals were once symbols of enduring partnership. Yet, if defense contracts are not matched by credible protection, their value is questioned. Gulf leaders are openly debating whether reliance on American systems leaves them vulnerable if Washington hesitates again. Russia and China, by contrast, are presenting themselves as suppliers unconstrained by political conditions. The perception of betrayal carries emotional weight in the Middle East. Broken promises are remembered for generations, and hesitation is often equated with abandonment. Qatar has felt this acutely. In June 2025, Iranian missiles struck near the Al Udeid base in retaliation for U.S. attacks on Iran's nuclear facilities. Though most were intercepted, the episode highlighted Qatar's exposure. When Israel launched its September strike, the sense of being caught in the crossfire intensified. Doha's diplomats privately warned that if Washington cannot guarantee security, Qatar will diversify its defense partnerships. Financial indicators underscore the consequences. On September 17th, central banks in Saudi Arabia, the UAE, Qatar, Bahrain, Kuwait, and Oman all cut key interest rates by 25 basis points, following the Federal Reserve's own cut. That alignment illustrates the deep economic linkage, yet the same states are building parallel financial ties with BRICS, purchasing Russian bonds, and exploring regional settlement systems outside U.S. oversight. Each step chips away at dollar dominance, reducing Washington's leverage over time. Trump did attempt to balance his response. At the United Nations Security Council on September 11th, the U.S. supported a resolution condemning the strike, but the wording avoided naming Israel directly. To Arab leaders, that looked like equivocation, condemning the violence in principle while protecting Israel from accountability. Qatar's foreign ministry spokesman Majed Al-Ansari declared the resolution inadequate, arguing that sovereignty had been violated and consequences must follow. The hesitation contrasts sharply with how Russia and China address such crises. Moscow called the strike illegal, and Beijing warned that unilateral attacks destabilize the region. While neither power is trusted fully, the consistency of their messaging appeals to Gulf states weary of mixed signals from Washington. The consequences for energy are, honestly, pretty profound. Saudi Arabia has reportedly accepted yuan for some oil shipments. The United Arab Emirates has explored non-dollar settlements. Qatar, in 2023, concluded a gas supply deal with India that was settled in rupees. These experiments were once seen as, symbolic gestures. But after September 2025, they look more like a roadmap for a new system. If the Gulf collectively accelerates this trend, the United States will face a world where the dollar no longer sets the price of energy. Global investors are already reacting. Sovereign wealth funds in the region are tilting allocations toward Asian assets. According to Bloomberg reporting in August 2025, Saudi Arabia's public investment fund increased its holdings in Chinese equities by more than 30% year on year. Qatar's fund is pursuing similar moves, deepening its exposure to Asia's growth. The rationale is clear. If security and energy trade shift eastward, capital should follow. The Biden years saw a slow erosion of trust. Under Trump's second term, the erosion has accelerated because, it is tied directly to crisis management. Diplomacy and trade agreements can be negotiated calmly, but when missiles fall and lives are lost, the speed of reaction defines reliability. 20 minutes of silence in Doha carried more weight than years of promises in Washington. The open question is whether the Arab bloc will now pivot decisively toward BRICS and Russia. Already, Egypt has signed massive energy contracts with Moscow. The UAE is expanding purchases of Russian weapons. Saudi Arabia continues to deepen coordination through OPEC+. Each of these moves reallocates billions away from U.S. firms, weakening the very foundation of America's economic leverage. The logic is straightforward. If the U.S. cannot be relied upon to act when allies are attacked, why should its currency or its defense industry remain the default? The Gulf is hedging its bets, testing new alignments, and signaling that Washington's monopoly is over. The IMF's reserve data, the BRICS expansion, the currency experiments all point in the same direction. The question is not whether change is coming, but whether it has already begun. Qatar itself is trying to balance. It remains host to America's largest base, but it is negotiating with Russia and China for air defense and surveillance systems. It has not abandoned Washington, but it is no longer betting exclusively on it. That shift is what makes this moment historic. It is not rupture, but recalibration. Trump now faces a choice: demand accountability from Israel and reassure Arab partners, or continue to shield Israel and risk losing the Gulf altogether. So far, his language has been careful, muted, and non-confrontational. That may satisfy domestic political considerations, but it leaves a vacuum in the Middle East that Russia and China are filling with speed. The last time the United States faced such a challenge in the region was during the oil embargo of 1973. Then, Washington managed to reassert influence through a combination of diplomacy, military presence, and financial leverage. Today, the conditions are different. The Gulf is wealthier, more diversified, and more confident in testing alternatives. America's margin of error is smaller. And so the story closes not with resolution, but with a question that defines the future of United States power. If Arab leaders now view BRICS and Russia as more reliable partners than the United States, what happens when the next missile strikes? Not in Doha, but in Riyadh, Abu Dhabi, or Cairo. We're glad you're enjoying this video. Please like and subscribe. Check out another video that is now on your screen.